joining us right here on ET Now is the Minister of State for Civil Aviation and one of the biggest voices as far as Indian economy and Indian finance is concerned. Jayant Sinha is joining us. Thank you very, very much, and I think many congratulations come your way. A clear validation of what the government has done in the last 3 years, I'd say. And you'd agree?
Yes, very much so, Supriya. Thank you for the congratulations. I think Moody's is late to the party, I will say. Really, all of the wide-ranging structural reforms that we've undertaken over the last 3 years have already been well recognized, certainly on the equity side of the ledger. I think debt is always late to the party, and in that sense, I think Moody's is giving us a long overdue upgrade. But really, I think what it reflects, Supriya, more seriously, is that the fiscal dynamics of India have become immeasurably better than they were 3 or 4 years ago. Of course, that has been clear to us for some time, and as I said, Moody and others should have recognized it earlier. But what we are doing by bringing down the fiscal deficit, by making sure that the states are fiscally prudent, we are actually working down general government debt over time, and of course, with growth kicking in, the overall level of government debt to GDP is actually becoming much more sustainable. And with the economic reforms underway, the kind of growth that we expect, the fiscal dynamics look very robust. And of course, that's really what Moody's is now recognizing.
You know, while Moody's, like you said, is a little late to the party, I'm hoping others will follow suit, and I'll have questions on that in just a bit. But, you know, plenty that has been done and plenty that Moody's does uphold you for, you know, whether it's the GST or demonetization, the formalization of the economy, the PSUB bank recap. What do you believe, and, you know, I'm asking you to be candid, what do you believe has been the biggest trigger for this upgrade right now and the first in 13 years?
Yes, indeed. It is quite historic in that sense that we've got this upgrade after so many years. I really can't point the finger to any one thing, Supriya. It really is, as they said, the series of reforms that we've undertaken. And really, you have to look at it from the following perspective, which is that there are really 4 important pillars that really drive our reform agenda. One is the formalization and the transparency that we need in the economy. Number 2 is global competitiveness, what we're doing to build out infrastructure, ease of doing business, all of those things that we're doing for global competitiveness. Number 3, of course, is innovation, because if we have to build a 21st century economy, it has to be powered and driven by innovation, and there's a lot that's going on over there. And number 4, which they've also pointed to, by the way, is what we're doing on social security. And there, I have been arguing for a very long time that what we're doing is historic and unprecedented, and what we can do through DBT, through Aadhaar, through the JAM Trinity, is to be able to provide social services to our people wherever they might be in a very efficient and transparent manner. It's the combination of these 4 pillars that really drives I think the bullishness, the optimism that you see about the Indian economy. And Supriya, I'd also like to caution you on one thing, which of course sometimes in our noisy media we forget, which is that most investors tend to take a longer term view than just 1 quarter or 2 quarters. And of course, the political rhetoric that always happens, there's a lot of political back and forth that happens during the election season. So we get very caught up and engulfed in all of that. But the reality is, those that are investing in India for the longer term, those that are thinking about India in terms of, let's say, debt, where you're buying 10-year paper, 20-year paper, 30-year paper, they really take a much longer term view. And again, as I have been arguing for quite a while, what we are clearly seeing is a transition in the economy. We are shifting from 3rd gear to 4th gear. And it's very obvious when you take the longer term view, when you step back from the noise, the signals that you're seeing, everything that is happening is really pointing to very robust, sustainable long-term growth. And that's what really drives India's fiscal dynamics. That's what drives the level of government debt, the amount of deficit financing we have to do, the interest that we have to pay out. It's those factors that I think when people take a longer term view that they realize are very robust. We've really put the economy on the right trajectory, and that's really what we need to lift India to middle income status and to bring all our people up that income curve.
Absolutely. You know, when you talk about long-term calls being taken by investors, and obviously the repercussions of this on the economy will perhaps be A, cheaper debt that Indian corporates can raise, and B, a lot more of investment that can come in. That's rating determined, so to say. How do you believe this is going to help revive the capital expenditure cycle? Because the cost of capital will obviously go down for a whole host of corporates out there.
No, that's a great point, Supriya. And the reality is everything becomes cheaper. Because what happens is that when the rating agencies improve the ratings on government debt, and remember, government debt is the benchmark for all debt, it brings down the cost of borrowing across the economy. And of course, you know, we have already been very successful with the masala bonds, something that we worked on quite a bit when I was in the finance ministry. Masala bonds have become very, very successful, very liquid as a market. What we'll see is that people who go out and issue masala bonds are going to find that the rates that they're paying are lower. Obviously, government debt is going to get cheaper as a result of that. And when government gets debts cheaper, then everybody's borrowing costs come down. Borrowing costs come down. Again, the economy becomes more globally competitive. We can perhaps see more capex because projects that are on the margin in terms of their IRRs and so on look much better. Debt financing becomes cheaper. So obviously it's a boost for the economy. Obviously it's very good news for us. It'll trickle in because a lot of this is going to be priced overseas and so on. But certainly I think even domestically, and most of India's capex, most of India's growth is financed domestically, of course, as it should be. So we'll have to see how it filters in domestically. But this is really a very big positive because it shows that we are moving absolutely in the right direction. And as I said earlier, you know, as far as the equity side is concerned, with obviously share markets being where they are right now, the equity side has already taken that bullish call. The equity side is already moving ahead and providing the kind of financing that's necessary on the equity side. So with debt getting cheaper, you know, obviously there will be more investments and the economy will get a further boost and will continue to grow from here. So it's a really good news story, as it should be. And as I've been arguing for quite a while now, we really are in that phase where we are positioning ourselves for stable, sustainable, long-term growth of 7-8% for decades. And that's what's necessary, because if you look at India's economic history, we've grown for short periods of time, then we've hit bottlenecks of various kinds, whether it's external financing, whether it's supply side bottlenecks, whether it's inflation going up. We've always hit those bottlenecks, and that has impeded our growth. Very important for us to get onto a trajectory where we can sustain it at those high rates of growth for a long period of time.
Right, right. Mr. Sinha, you know, it looks like a lot of the good news is culminating, whether it's the ease of doing business ranking at the World Bank and this. So, yes, of course, a lot of work has happened, and I think that's validation of that. So, in some sense, this must be good. But I'm going to just take a step back. And if you actually read the Moody's entire press release and the entire report, it very categorically also, you know, it does mention PSU Bank recap. Now, this is an issue that a lot of people were losing sleep over because people thought this is going to have fiscal implications. Does this upgrade in some sense also put the challenge and the pressure on the government to stay on the course of fiscal consolidation, to perhaps be fiscally more prudent than ever before?
Well, we've always said we are on the path towards long-term fiscal consolidation, and the N.K. Singh committee obviously has laid out a roadmap for that, which is under advisement right now with the finance ministry. But I think what's very important, policy moves very sure-footed, that we've shown over and over again, whether it is the bank recap, handle GST and demonetization, that we have been able to respond to feedback. We've been able to take on board criticism that people have, which is always welcome. That's the only way we'll get better. So the criticism is always welcome. But it's the sure-footedness of our moves, the ability to move the policy levers in the right sequence and in the right ways. I think that's what inspires the long-term confidence, and that's what gives Moody's also the long-term conviction that as far as fiscal consolidation is concerned, as far as fiscal dynamics are concerned, they are on a much better trajectory right now. And it's only going to get better from here on, because, you know, the reforms have been underway now for a year or two in terms of the big ticket reforms. Of course, we have the Air India privatization coming up as well. This is another big ticket reform. So the reforms have been underway really only for a year or two. The effects, once we get through the teething troubles, will start to show up. And that's when I think the full picture will begin to emerge. And I think we will continue to see further, very important boosts to the kind of policy package that we have in place.
No, absolutely. There's no denying that more will happen, and that's going to add on to the positive sentiment. But, I'm going to point out to another point that Moody's makes. It makes other important measures which have yet to reach fruition are land and labor reform, which rely to a great extent on cooperation between the center and the states. The planned land and labor reforms are obviously a Herculean task because it's politically sensitive, lies a lot in the ambit of the states. But do you believe, given this upgrade and given the validation that you've got for your other reforms, is there going to be renewed political will, political courage, political mandate to perhaps go ahead and bite the bullet on the land and the labor reforms?
It's very important, Supriya, when you take on important policy measures, that there be a appropriate national consensus around it. We are a democracy. We have many voices in this democracy. We have many people that have strong opinions about how economic reform should happen. And all of that has to be taken into account. All of that has to be considered, and a consensus has to be built to take forward very important reform efforts like land and labor. As you know, early on in our tenure, we did undertake to reform the Land Acquisition Act, but we have not been able to yet forge a national consensus on the best way to reform and expedite that. In the meanwhile, lots of very progressive states, including my own state of Jharkhand, have undertaken ways to expedite and make it possible to get land if you want to invest. So state governments are working very hard to be able to resolve those kinds of challenges. Certain other states have taken very important steps as far as labor reform is concerned. So the national consensus, Supriya, is being built bit by bit, and that's how it should be in a democracy, because these are very emotional subjects. They touch on people's lives in a very, very day-to-day and important way, and so they really have to be something in which we forge a national consensus. So let's see how that national consensus develops. Obviously, government has done its bit. We have been proactive about expressing what the infirmities are, what it is that we have to remedy, and at the same time, we have to be able to forge that national consensus.
Absolutely. But, I also think Moody's perhaps is giving you a big thumbs up even for demonetization, for that matter, something that has been a huge political debate in this country and otherwise as well, whether it has had the dividends or not. But I think it's saluting the formalization of Indian economy that has happened on account of demonetization. And I know that's a subject that's extremely close to your heart. That's a subject that you've championed for some time now, that how savings need to move to capital markets, to mutual funds, to insurance and all of that. While this formalization has happened on account of demonetization, how does the government believe this is going to be a sustained effort over a period of time? The formalization on account of demonetization is a big, in some sense, a spike that we've seen. How does the government plan to sustain this over a period of time?
No, Supriya, that's very important, because ultimately, again, if we look to the fiscal dynamics, we have to financialize savings so that government debt can be serviced, so that tax base is expanded, and so that we mobilize resources appropriately. That is very important to be able to continue growth in a robust, sustainable manner going forward. So formalization is extraordinarily important for all of those reasons that I just said. But again, you have to look at demonetization as a element of the overall package of formalization, which includes GST, which includes the crackdown on Benami transactions, which includes the disclosure schemes that we put in place, which includes all the efforts that we have made around the world to be able to crack down on tax evasion and so on. All of those present a unified package through which we have been pursuing formalization. And again, as I said, the benefits of formalization is higher tax base, financialization of savings, lower interest rates, and of course much healthier banking systems because the deposit base grows when we bring in savings from real estate, from gold, and so on and so forth. So it's a package. Again, you have to look at it in terms of all of the different efforts that are adding up now, and increasingly as these efforts add up, increasingly as the momentum picks up, you will begin to see that tax to GDP, which of course has a very important bearing on our fiscal dynamics, will continue to increase as it has been increasing. Tax collections have gone up much higher than the trend line. These are all examples of how all the different elements of our reform agenda are now working in conjunction with each other to mutually reinforce each other. And I think that's really what Moody's is now seeing. But again, as I said, they're late to the party. All of these have been actually obvious for some time now. And it's gratifying that they have endorsed it. But again, we are not satisfied. We have a lot more to do, and we'll continue to do that.
Before I talk about Moody's being late to the party and others joining in, I'll take a quick word also on monetary policy framework, because amongst the rationale that has been outlined by Moody's, monetary policy framework has also got a big thumbs up, which essentially means that ratings agencies have given a validation for the fact that the RBI and the Monetary Policy Committee and the framework and how it's working is a good thing. And in that case, it's autonomous, it's independent. That puts a lot of pressure on New Delhi and a lot of us who sometimes believe that the RBI should be biting the bullet on interest rates and other things like that. And you haven't been immune to that temptation. So in some sense, monetary policy framework and the autonomy and independence of the RBI in deciding interest rates has also got a big thumbs up there.
No, that's a very important point that you brought up, Supriya, and you're exactly right. It's somewhat esoteric for most people, but for those of us who have spent our lives in the capital markets know how important the MPC is and how important inflation targeting is, because of the signaling and the credibility and the institutional sort of independence that it clearly highlights. And that's why this is such a fundamental structural reform that we've undertaken through the Monetary Policy Committee. And the fact that we now have tied, if you will, the RBI to the mast with respect to 4 ± 2 gives the capital markets the very, very clear signal that's the range in which inflation is going to be in India. And once they understand that, then obviously it strengthens the currency. It enables a lot more inflows both on the debt side as well as on the equity side, and really, really strengthens our macroeconomic stability. All of that, I think, is something that is a very fundamental step that we've taken, and I think monetary policy will continue to be, when history judges us, one of the very important landmark reforms that we have also undertaken.
Oh, absolutely. One last question before I let you go. While you believe Moody's has been late to the party, when do you expect the others to follow suit and join in as well? And if I may, it's my job to be a skeptic because I'm a journalist. While a ratings upgrade is, of course, a reason to celebrate, it has come in 14 years later. We are also the first sovereign to be upgraded after the credit crisis, while our peers have been downgraded in the same, the same period. We are actually now at par with Spain and Portugal, which have debt levels of 99%. So while we celebrate, we can't lose of the relative sight of where the world really is.
No, and Supriya, that is a reflection of our low tax to GDP ratio. You see, we have a high debt to GDP ratio. If I remember, the last time I looked at it, was in the mid-60s as a percent of GDP. So we have a debt to GDP ratio of mid-60s, but our tax to GDP ratio is only 16.5%, 17% for both state and center. Portugal and Spain have tax to GDP ratios more in the mid-30s, and so their ability to service government debt is much higher than ours is, because our tax to GDP ratio is low. And that's where the formalization part becomes so important, because as we formalize the economy and as we put the economy on a much more stable footing in terms of the tax base, again, the fiscal dynamics really start to work in our favor much more so. And that's really the virtuous cycle, Supriya, that we are looking to get onto with this combination of measures that we are undertaking. And I think that's really what we have to kind of keep our sights fixed on, is to be able to really flip the fiscal dynamics over from the negative vicious cycle it was in to the virtuous cycle of declining debt to GDP, higher tax to GDP, lower interest burden. That's really what we have to tip the fiscal dynamics to move over. I think that's what Moody's is recognizing, and that's why, exactly as you point out, it's happening after 13, 14 years. It's the first sovereign to be upgraded since the financial crisis. It's because they are beginning to see, albeit late, that the fiscal dynamics have flipped over.
Right.
Certainly the other rating agencies will follow, but we've already seen that the World Bank, the IMF and others are recognizing the impact of what we've done.